In this video, traders, let's talk about what's the point in planning your trades when we've got no idea what's going to happen anyway. Stick around. Hey guys, warm welcome to you. Thank you for joining me. I know there's lots of guys on YouTube you can listen to and appreciate your time watching, and I hope you get some value from the videos. I don't pretend to have all the answers, of course not, but if I can share some things that I've learned along my journey or that I've heard from others, and I can kind of put them into hopefully a concise video that you can take a few things from, then that's a great thing. It's a great outcome, and if it can help your trading, that's fantastic. All right, so what's the point in planning your trades? So we talk about this all the time. Plan your trade, plan your trade, plan your trade. Yes. It goes up there with write a journal and manage your risk and cut your losers and run your winners. We get it. But you kind of think, what's the point? I don't know what's going to happen with the trade. Why should I even bother planning it? So here's the reason why you need to plan your trade. Now, the point is with planning is we're not saying this is exactly what's going to happen. We are saying, okay, what could happen with the trade? Where could this market go? Now, I've got USD JPY in front of me here. Good example here, a really kind of textbook type trade, worked out fine for those who took it. However, things can be very different. We know that things don't always work out as they want, as you like them to. So imagine you've seen this kind of good move up higher. You're like, okay, I want to wait for a pullback. Yeah, USD JPY has been ripping higher. I want to get long on this. It's going. And maybe your strategy is to get long. You could perceive that as a momentum ignition type trade, and I would agree with you on the higher time frame on a daily here. Purely an example, guys, just to kind of prove this point. You say, right, we're flagging. I want to get long on a flag. Now, if you guys know, I've probably kind of shared some stuff on this before, but just as a reminder, one of the ways it's very, very effective, and always do your own kind of homework on this, is a trend line type break. Like, this is one of the things we talk about a lot. There's some other things as well, or nuances to look for, but broadly speaking, not a bad way to get into those high type flags. So, example, USD JPY comes up. You take that break as it goes up on the close, on the intraday break, whatever you prefer, however aggressive you are on the trade. Now, you hope that it's going to do this. You're like, okay, I think it's going to go to 110. There's my target, 110. I get in here on the break. It's at 109. It's a nice big move. I can risk a little bit under that low. It's a 30, 40 pip risk. It's a decent kind of whatever I'm going for, whatever my target. It's a decent risk reward ratio, I guess is what I'm trying to say, regardless of what your target could be. 111, 110, whatever. The point is, that's what you want it to do. Now, I'm guessing if you're watching this channel, you're probably reasonably experienced. You're taking a few trades, you kind of know what you're doing. You're just trying to fine tune things and get things moving forward a little bit more. Maybe to pick up a few hints and tips and ideas you take away from one video, discard the other. That's the name of the game. So you hope and you're expecting, and okay, let's say we don't use hope, but on the day we want the trade to work, whatever you want to, how you want to frame that, I want to describe that. But you've also got to think about other things that can happen. Now, this is not just from a risk management perspective. Of course, you say the market could go low and stop me out, and that's fine. But sometimes framing and planning the trade helps you have confidence that you're going to be able to withstand any kind of thing that happens. Because the markets, we tend to think the market's going to go hit our profit target or it's going to stop us out. Are we happy with that? Fine. And that's a good starting point, no doubt. But very often, guys, the market might go near our stop and come back up. Maybe it hovers around our entry. Maybe it goes near the top profit target and comes back. These are all things that we should plan for in our mind at least. How are we going to react to that? If you think about how the military plan a mission, I don't know, many of you guys watching this have been in the military or know people or families in the military. And when they're planning a mission, you say, right, this is what we're going to do. What could go wrong? And they kind of go around the room and they go, what could go wrong? The radio could stop working. This could break down. We could meet contact on this point, that point. And what are we going to do if that happens? We're going to do this. These things are maybe unlikely, but they are planned for. So, okay, you get the analogy. So what we do is we kind of say, right, what could happen here? So we go, right, well, I'm going to buy it here. We could kind of go up to highs and then we could go tickle back to lows. That's one scenario. Or, maybe we kind of push and nearly hit my 110, then go lower and then come back and hover there. What we're going to do then? What about if we go just to the stop and then sit here? So it doesn't go crazy, but you're kind of thinking, all right, what are the scenarios for the trade? And when you're thinking of scenarios, what that does is it puts you in a comfortable position during the trade. This might not seem like a logical thing to do because ultimately, like, I'm not going to make a profit, I'm going to make a loss. But think how many times you've broken your rules, or think how many times you've jumped out of a trade that's close to your profit target. Think how many times it's gone near your stop and you've gone, oh, I don't want to wait to my stop, and you've overridden the whole thesis of the initial trade. The beauty of doing this is it preempts that. It basically says, okay, if we are to do this, what do I expect? What am I going to do? So let's say your profit target was 110. Let's say it goes up to 109.84, rocks back to 75 and sits there. What are you going to do? You've got a couple of options. Are you going to drag your stop up? Are you going to close half the trade? I'm going to close all the trade. Are you going to do nothing? Planning these things, especially guys, things that you know cause you to break your rules. You know these things. You've got your own ones. I've got my own ones, and it's kind of not knowing what affects your chimp with chimp paradox. That little voice in your mind that's saying, close a trade, chase the trade, revenge trade, don't override the stop, add more size. All that stuff that we know we want to kind of discard as much as possible. But what activates your chimp? If it is getting close to your profit target and coming back, then plan for that. This is when we talk about planning the trade. It's a case of how will I react if it goes there, then does a day where it does nothing? How will I react if it does this and do that? Planning all the eventualities. Take each trade very, very seriously. Take each trade like it's a brand new, fresh mission that you are risking hundreds of thousands of pounds, dollars, euros on of your money, and you are taking your time. Because if you do that, what you're doing is you're setting yourself apart from everybody else. You're giving yourself the confidence, and you are then putting yourself in a position where you know whatever happens with that trade, you are comfortable with it. Go straight to your stop, fine. You take your medicine, you move on. Go to your profit target, fine. Those are the two binary outcomes, but there's so many other type of outcomes within it. So, final thing is, don't go crazy with it. Don't do 100 different outcomes. So it goes up one day, down the next. Do 3. 3 broad outcomes other than straight to profit target, straight to stop. The ones that are going to trigger you the most to maybe mismanage the trade. Think about them, become at peace with them, become happy with them, just like this yen trade here, and say, okay, it's going to go here, it's going to come back, it's going to do this, it's going to do that. Those are 3 things that I would maybe want me to close a trade too early, or move the stop, or this or that, the other. Decide what you're going to do with them, write it down, close that book, and go, right, taking the trade, I feel comfortable now. Now when those scenarios happen, you already have in your subconscious how you're going to respond to them. Hope that helps, guys. See you in the next one. Take care. Thumbs up, of course, is appreciated. Bye-bye.